Welcome to the Energy Market Wrap from Enverus. The ongoing U.S.-Israel war on Iran continues to ripple across global energy markets, driving sharp volatility and accelerating operator response. In the U.S., ProFrac reported it is fielding a lot of calls from operators looking to push forward drilled but uncompleted wells to capture war-driven pricing strength, with rising demand for dual-fuel fleets as diesel costs climb. At the same time, the conflict has heightened energy security concerns abroad, prompting the UK to accelerate its next contracts for difference auction and introduce plug-in solar as part of a broader push to reduce exposure to fossil fuel price shocks. Turning to U.S. upstream news this week, Permian Resources highlighted the durability of its well productivity profile. Leaders credited consistent bench sequencing, multi-bench co-development, and incremental shifts toward longer laterals across its Delaware Basin footprint. Repsol outlined plans to allocate 2.9 to 3.4 billion euros across the U.S. through 2028, representing more than 80% of the company's upstream capital investment during the period. U.S. volumes are expected to grow 25 to 30%, driven by activity in Alaska, the Gulf of Mexico, the Eagle Ford, and the Marcellus. Infinity Natural Resources priced $550 million in senior notes to repay revolver borrowings associated with its recently closed Utica and midstream acquisition from Antero. The refinancing strengthens liquidity and positions the company for continued development across its broadened asset base. IOGR III completed its first development partnership in Wyoming's Powder River Basin. The joint venture will drill 18 horizontal wells, marking the 20th investment for the non-operated platform backed by First Reserve. Turning to midstream, Kinder Morgan advanced the Texas Access Project with a FERC filing. The 3-mile, 48-inch extension enables up to 1.3 billion cubic feet per day of incremental transport into the Louisiana LNG corridor and is fully supported by a long-term precedent agreement with Woodside's Louisiana LNG affiliate. MidOcean Energy raised more than $1.2 billion in new equity, surpassing its initial target, as investor appetite for long-dated LNG exposure strengthens amid global supply tightness and geopolitical risk. In oilfield services, SLB1 Subsea secured an integrated subsea EPC award from CNOOC for the Kaiping 18-1 development. The scope includes standardized subsea production technology across 20 wells with installation and commissioning support. Atlas Energy Solutions entered a global supply framework with Caterpillar for more than 1 gigawatt of natural gas-fired reciprocating generation equipment. The agreement supports Atlas's reinforced push into behind-the-meter and private grid power for data centers and industrial loads. In renewables and CCUS, Controlled Thermal Resources announced a SPAC merger valuing the Hell's Kitchen geothermal lithium project at $4.7 billion, advancing a major integrated geothermal and critical minerals development in California's Imperial Valley. We close with international upstream, where Petrobras will acquire Petronas's stakes in 2 Campos Basin fields for $450 million, consolidating full ownership of assets producing 55,000 barrels per day, and separately announced a new offshore Colombia gas discovery near its large Sirius trend. That concludes this week's Energy Market Wrap. Thank you for listening. Keep your finger on the pulse of the energy industry with Enverus Publications. Contact business development at enverus.com or visit enverus.com.